Welcome to Second Take, the show that focuses on the issues behind the news. Global debt markets appear to be easing. This is indicated by the progressively declining capital-raising coupon rates on offer from mining majors BHP Billiton, Anglo American and Rio Tinto. With me in the studio today is Mining Weekly editor Martin Creamer, who will give us some insights into this trend towards more favorable debt terms. Martin, can you give us a brief background on convertible bonds and corporate bonds?
Yeah, well, we saw Anglo American, which is an iconic company in South Africa, raise a corporate bond. They were looking for $2 billion, and the coupon rate, if I remember correctly, was above 9%, I think 9.375%. And this raised eyebrows because shortly afterwards, they came in with a convertible bond offer. And the interest rate, the coupon as they call it, the coupon spread was much lower at between 4.25% and 4.75%. So people started asking, well, why didn't they raise, the full amount? Because they were looking for about $3.5 billion, and they thought, well, why didn't they raise the full amount with the lower coupon? But I think there are different types of needs, and I think that the corporate bond, which is a straight debt instrument, was used to try to restructure their financing, whereas the convertible bond, which is a crossover between debt and equity at some stage, is really an effective cash on the balance sheet that can be used immediately.
What would you say is happening in the global debt market at the moment, and why is it happening?
We sat there after the meltdown and there was a very tight debt market. People couldn't raise any form of capital at all. They couldn't raise equity, they couldn't raise debt, they couldn't get their hands on capital. The banks were illiquid. And around about May, I think that's when Rio Tinto issued its convertible bond, possibly at the worst possible time. It was just after Lehman Brothers had collapsed and the world was in absolute financial turmoil. And their coupon spread was quite high. I think they offered 9.5% on the coupon spread, and the offer was to Chinelco, this Chinese company. Subsequent to that, we see that the coupon spreads have been coming down quite progressively to a point where Anglo, which we are closest to, of course, in South Africa, got away with offering 4%. So that was very favorable to the company. And they also managed to stretch out the level of conversion, what they call the level of the conversion. So at certain times, because this is a convertible bond, it means that you can convert it to shares at some stage. In this case, 5 years down the line, or there are certain circumstances where it can be done after 3 years. And this was supposed to be done at a level where if the share price had increased by 30%, which made it favorable to the buyers, but Anglo was able to stretch this out to 35%. So it shows you that it was able to do a better deal at both ends of the spectrum, both at the 4% level what it was offering and also at the conversion level. So this indicates an easing in global markets. People are able to raise debt far easier. But whether it's only for the big giants like Anglo, BHP Billiton, and people with very strong balance sheets, ArcelorMittal also did a capital raising, but wasn't as favorable as by any means as Anglo's. Anglo's has stolen a bit of march. I think they were even offered $10 billion, although they were trying to raise $1.5 billion initially, dollars we're talking about, with this convertible bond. They were able quickly to extend that to $1.7 billion, which shows the strong demand. And then they let it be known that actually $10 billion was on offer to them. But I think they're choosing to raise their capital in shorter spurts.
Why, in your opinion, do you think it's becoming so much easier, and what do you think it could mean for the economy at the moment?
Well, it's very important for the economy, but we must realize that it's not normalized. That's why I was trying to make the point that these big diversified majors, yes, people are falling over themselves, to give them money. But the same does not apply to the smaller companies, unfortunately. And so we've got a long way to go, I think, before this normalizes. But it is important that we see an improvement at the big level, because a lot of these companies, have got projects, and that feeds into all the local economies. People are building new aspects of their business, and if they don't get their hands on this cash, they'll slow down completely. Others, like BHP Billiton, there is a bit of a suspicion because it had a very low coupon on its own corporate bond of 4%, because its balance sheet is so strong, that they may be raising the 2 billion they got. I think it was in part euro, part dollar. They might be building up a war chest to maybe acquire some of the more vulnerable companies. But the jury's still out on that. And BHP Billiton said, look, this is just going to be used for normal corporate purposes. So they were giving no glimpse at all as to their intentions. But some of the analysts suspect that possibly they are raising capital in order to make an acquisition at a time when there is some low-hanging fruit because of all the problems the world has had.
So do you think there might be a trend emerging or not at the moment?
I think that there'll be a progressive easing, a progressive build-up. We can already see the progression going from the first out of the starting blocks was Rio Tinto with the most unfavorable terms, in November last year. Since then, we've seen ArcelorMittal come in with better terms than Rio, but still not as good as Anglo. And then Anglo actually with this convertible bond, the latest one, showing that there is a strong appetite, a global appetite, for giving money to companies of that sort of ilk. And hopefully it'll start cascading down to the smaller companies, and we'll reach a normal capital raising and debt raising and equity raising situation, because equities are now starting to perk up as well. We see the bounce in the equities, a bit of a bellowing from the bulls, and a chasing away of the bears. Especially in resources stocks, mining stocks. So there are indications of improvements coming through, not as fast as we would like, and not spread as far down the line as we would like, but definitely a better outlook as we speak now.
Thank you so much for joining us in the studio today, Martin.
It was a great pleasure, Shannon.
Thanks. That's the show for today. Join us again next time as we take an in-depth look into the mining world's premier projects, industries, and business personalities.